the main stakeholders and constituents driving the urgency to address this issue of climate change, and how have those expectations of these stakeholders changed over time? We'll start with Valerie.
I would say that the stakeholders focused on climate change have evolved fairly dramatically in the last, say, 3 to 5 years. For large institutional asset management firms like AllianceBernstein, we have to respond to the demands and requirements of our clients. And our clients tend to be large institutions, so asset owners. They could be large sovereign wealth funds or pension plans, endowments, high net worth individuals. And increasingly, those stakeholders have required of us more intense due diligence on climate risk. In addition to that, simply as a matter of our fiduciary responsibility, we have all witnessed degradation in value in some cases, and also creation of value related to climate change in the companies in which we invest. And so as part of our portfolio management process and our investment research process, we absolutely focus on these issues. But I would say that the push for us really came from our clients. We were already signatories to the United Nations Principles of Responsible Investing, or the UNPRI, but the client demand and the client requirements has really, I say, pushed asset managers, whether you're a passive manager or an active manager, to focus on climate change.
From a company perspective, which may be relevant for you today, I think we have to broaden the constituent base out further than just the investors, which of course are going to be important. But key stakeholders who are driving a focus around climate change and climate risk are going to include regulators, of course, because so much of this work, and Wayne is likely to agree with this as a German-based company, there's a ton of top-down regulations that are putting pressure on companies to do more as it relates to their climate risk assessment. So there's a top-down pressure that's coming from regulators and policymakers globally, not just in Europe, but also increasingly in the US and other parts of the world as well. Australia, Canada, not so far behind either. The third area to remember is how climate risk is getting a bottom-up pressure from employees. Your employees care about where they work. They want to work with organizations that they believe in, who have strong sustainability commitments, because the millennials, the next generation of your talent pool, care deeply about these issues, and they want to work with companies who take these issues and commitments seriously and recognize that as companies and private sector owners, we have a responsibility to help be part of the solution.
So this is not a moral topic for us. We're not passing judgment on climate change, other than to say we have big pressure groups like the regulatory bodies in Europe, and that will grow over time around the world, putting pressure on us. So it's a bit of a license to operate if we don't do something. The second is, it was mentioned earlier, consumers. Our customers are starting to change. There's no question about it. Now, we're B2B, so we're industry to industry in what we do. But if you asked me 5 years ago, how do customers respond to, let's call it, sustainability innovations, right? If we bring them a slightly new product compared to what they had, but had a better sustainability footprint, we would be asked all the time by investors, will they pay for that? Will they pay more for that? And almost inevitably, the answer in 100% of the cases was no, they won't. You fast forward to today, and the conversation is different. So we felt it was an imperative, a business imperative, to build a strategy around this. We started with a new company purpose statement. We create chemistry for a sustainable future, so we just put it out there. Last year, when we rolled out our new strategy, we rolled out 8 external KPIs that we target. Now, 4 of them are traditional financial metrics, ROCE and EBITDA and such, and 4 of them were sustainability targets. The biggest and boldest was a CO2 target, where we said we will grow our volumes between now and 2030 by 50%, and we want to grow the business, but no incremental CO2. Wow. Now, for an energy-intensive company, we kind of scratch our heads, how are we going to do that? It's about bold technology, so innovations that take some of our CO2-intensive processes and could dramatically improve them. But the topic here is it will take us 10 to 15 years, we think, to commercialize such processes. So you heard about the speed of innovation this morning around digital topics and such. In the physical world, the R&D takes longer. So we are now funding a number of we hope, breakthrough innovation programs that will take 10, 12, 15 years, tens of millions of dollars per year. We have more than 100 scientists dedicated to it, just to tackle this sort of fundamental CO2 generation in our company. Now, a lot of risk involved, but we say that's got to be part of the strategy. Now, to put a little teeth to it, this external CO2 target is now one of the 4 KPIs in our long-term incentive plan for executives.
That is exactly the kind of answer that I, as a portfolio manager, would want to hear, because he talked about their long-term strategic plan. He talked about understanding their business and the evolving needs of their customers. He gave some estimates around the CapEx that's going to have to be invested to get from here to there. And so I tend to be a long-term holder. So I can now sort of, if you will, partner with you, right? And say, okay, I understand your long-term vision. I understand that you have evaluated the potential impacts of climate change and that it's been integrated. The opposite that I still hear oftentimes is people will lay out the grand strategy. They'll give you the targets for EBITDA and CapEx and the return on invested capital and so forth and so on. And then I will sort of gently introduce the corporate social responsibility report and go through the numbers that are listed there as they relate to the carbon targets and other dimensions and emissions. And I'll say, can you help me understand how these two things come together? Meaning, what are your assumptions in the CapEx forecast, and how do they relate to what you're saying you're going to accomplish in these other metrics? And oftentimes, unfortunately, I get a blank stare. As an institutional investor, our expectations of the board have evolved, meaning we expect board members to exercise oversight over these issues, just as you exercise oversight over other types of risks or other types of strategic issues within the company. And so at AllianceBernstein, we meet frequently with the management teams in which we invest, so that's typically the CFO and the CEO, but oftentimes we ask to speak to the lead director. Oftentimes we ask to speak to some of the other independent directors, because we want to understand your level of comfort with the strategy and the level of oversight and accountability that is in place as well.
If I ask any employee in BSF who's under, 28 years old, and I ask them all the time, how did you hear about our company? What made you join here? We're not a brand name. And they almost always tell me, 2 out of 3 times, when I started researching in the interview process, I liked what you were doing around sustainability. I liked your purpose statement. I'm excited. I mean, that wasn't on my radar screen 30-some years ago, 40 years ago when I left school, but it's on the radar screen of so many young people now. This is how we have to compete for talent.
Next year's conference takes place at the Ritz-Carlton, Amelia Island in January. We very much look forward to seeing you there.